Yeah, but like jumping in, give us the rundown of like the news that's hitting, and then I have a question about why we all feel differently about this news as opposed to the same amount of news last week. So, like, what are the headlines? What do we got?
So we've had the Hinman documents
Yeah.
released today.
Mm-hmm.
We've had CPI data print today.
Yeah.
We've got the Fed tomorrow. We have,
The Fed. Oh, geez. Yeah.
yeah, we've got the Fed interest rate decision tomorrow, along with PPI data. We've got kind of more discussions on whether stablecoins are securities this week. We're having some discussions about whether NFTs are securities.
I can't
Uh,
believe this case. I can't wait to talk about that a little bit more. Go ahead.
I mean, we've got Gary Gensler and whether or not he's going to be fired by Congress
What in the
for,
world?
yeah. So there's a bill to restructure the SEC in front of Congress right now. And in that bill, part of it would be to fire Gary Gensler. And it's being supported by the head of the House Republicans,
Really?
yeah, so Tom Emmer, and it's put forward by Warren Davidson, who leads like a pretty key swing state in Ohio. Um,
Wow.
so we were kind of talking about a lot of things. I mean, we're having A16Z announcing intention to open an office in London.
Yes.
So
And is
we've
that
got,
their attempt? I saw that. Let's zero in on that real quick. And for those just checking in, this is Aussie, the man. This is Grant. Jarrett, our Colombian brother, is down and out this week or this
with Bitcoin
today.
fever.
Bitcoin fever. Is that what we're calling dengue? We don't think he has dengue, and he doesn't have COVID, but he is still in recovery. So hello, Jarrett. We hope you're doing well. So this A16Z thing, real quick. Opening an office in London. Is this their version of Coinbase moving offshore? Is this an offshore move for their crypto arm?
I think it allows them to at least operate in a little bit clearer regulatory environment. So
Mm,
it could be suggestion, yeah, that they're kind of like offshoring, like there's been discussion about Coinbase doing. There is a lot of crypto development that is happening in the UK, although
yeah.
we're also seeing some odd regulations coming out of the UK. So
Like what?
it's kind of a mixed bag. So the UK announced under their new current rules, crypto airdrops and free NFTs would technically be illegal
What?
if they
Stop
were
that.
designed to incentivize people to invest in digital assets. So yeah, so that's kind of like a very weird
I mean, isn't
rule.
everything an incentivization to invest in everything?
To some extent, yeah. And I mean, we get free samples at the grocery store when you
All
go
the
to
time.
Costco all the time to incentivize you to buy their
Is this
product.
mango curry stir fry a security at Gensler's? Like, yes.
So, so we're kind of dealing with some pretty kind of interesting things because I mean, I got the Arbitrum airdrop.
Yeah.
I don't necessarily know if how that would fall under their rules because
Yeah.
it wasn't necessarily to incentivize people to invest in Arbitrum because you couldn't buy Arbitrum until after the airdrop,
Yeah.
but
Yeah.
it
And
was
this raises a
incentive to
great
use
point. Like,
the
is it,
network.
and that's a great point. Like, to incentivize is usually a preemptive act, not a post act. And like, let's say I finally launch the Spark membership card, and then I airdrop a new artist collection as a reward. If I don't promise it necessarily, but I offer it as a point of loyalty or gratitude, or even points for participation, is that an airdrop? And it does incentivize loyalty and participation. So at like where's the again, this is the regulation thing of like, no, you have to define where this line is drawn. I saw Coinbase post this GIF or this video. I couldn't tell what it was, and they said the Howey test was constructed in 46.
Yeah, it's the Howey test is really old. I don't know if it's 46 or if it was 64, but it's something with those numbers. Yeah.
I mean, this is going on an 80-year-old law for assets that are completely different. Are POAPs a security? That's a great question. Yeah, I mean, a proof of attendance, and if you promise, and that's like it's the promise component that Jarrett's getting at. If like right now, Jackie Roach and her partner Alex, they're at the DAC FP event in Austin, and they're with my crypto advisor. They're doing their thing, and I think most of these people get a POAP. And it's like, hey, come on and get this collectible ticket. It's like, is Ticketmaster my Metallica ticket stub from 1993 Lollapalooza? Is that a security? Because it was a collectible that I knew was going to go on my wall, and it's like, well, you can't resell it. That's collectible. Some you can and some you can't, and the mystery is part of the fun. This is why Gary Vee does like his garage sailing. Like, I don't know, maybe some of these are collectible. Who knows? And when they sold, they did sell with some mystery, maybe not a direct promise, but an allusion to some sort of value after the fact. And so why is a POAP any different? You get a ticket from Relic Tickets. Our guys Hunter and his crew from Relic Tickets, the NFT ticketing group for what did they do? South by Southwest. And it's like, hey, this could be a collectible that trades. It might not. We might airdrop you something. We might not. What's the difference? And what's the point of regulating it if we don't know? Like, there's smart people at the SEC. They don't know. So what are they doing? Consumer protections? They can't argue that.
They could make the argument for Binance because of the charges that they put against Binance.
Well, Binance was the fraud.
Yeah, the fraud and the commingling of funds. That could be the argument. And the argument with Coinbase, at least for the staking part, is that there wasn't sufficient disclosures.
Yeah.
So you could just get disclosures, and fraud is the protections, but the whole is something a security or not? Is a cryptocurrency a security or not? You're not really protecting consumers there.
Yeah.
At least not right now.
Allison Jarrett is here, but nursing himself with Pedialyte in the mountains of Bogota. He's come down with a flu. He's lurking in the question. So by all means, direct question to him. He'll be on hanging out. So this is not necessarily just a test for crypto and NFTs. This is a test for the role of the SEC. Do you think Gensler, you know how every president comes in and issues in the United States and issues like executive order after executive order after executive order and pushes the boundaries of, hey, I want executive powers. And the executive branch was not supposed to have these powers, but they're pushing those limits. Do you think Gensler is trying to just leave his mark?
I don't know. I feel he's still got 3 years left in his term right now. So I feel like it's a little early to be saying he's trying to leave his mark. He's still kind of got time for that.
It feels like he was tasked with expanding these powers, or is this just like a blanket umbrella attack to make sure there's no alternate currencies in the world, in spite of the fact that we're de-dollarizing ourselves? We don't need crypto. Crypto's like the answer to the problem we've been having. But are they getting the cart before the horse? Are they blaming? I mean, do you think they're smart people, but do you think in their minds it really is crypto that's causing all this havoc with the power of the dollar? It can't be.
No, I don't think they think crypto is the big thing that's hurting the dollar. I think crypto, a bunch of them got egg in the face because of the FTX situation. They were working closely with Sam Bankman-Fried.
They were, yeah.
So when his Ponzi scheme collapsed, a bunch of the Democrats and Gary Gensler in particular got a bunch of egg on their face and essentially are now at least partially trying to cover their butts and overreacting in how they're doing it.
You ever
If
been in an argument with somebody and you've been arguing for a while and their position sucks and they're just yelling, but you can see behind their eyes they've lost the thread, but now they're in over their head and they've just got to keep the argument going. And they're looking for an exit. They're looking for a redirect. That's what this feels like to me. Like FTX happened, both guns blazing, pew, 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 and now you're in neck deep and you're like, I got to keep going because I'm just in this.
I feel like some of Elizabeth Warren's comments make me feel that way.
Oh, really?
God, when she says like crypto is the reason for like the fentanyl crisis. That's
Oh, yeah. Those
when she makes comments like that, I'm like, yeah, you're
reaching, sis.
you're reaching so hard.
Yeah.
Cash is equally, if not 10 times more damaging and responsible for the fentanyl crisis than
I think it's
crypto.
infinitely more because it's the current global currency and changing quickly, granted. But as long as it's been the currency, that's what all the crimes have been happening in. I mean, there's no need for a $100 bill, except in large cash payments that happen in a briefcase. Real quick, Jared says crypto is an easy scapegoat because most people don't understand it, and the USG will do anything to blame money printing problems on anything but money printing problems. Now, this comes full circle. This is kind of an older argument, but knowing what we now know, Aussie, do you think that all of this is a smokescreen because of inflation?
I think part of it is an argument against inflation. Because if I were an intelligent Democrat, and this is very, very important. If I were an intelligent Democrat, the argument that I'd be making is that smart crypto investors who made a lot of money in the last bull run then bought real estate, and that caught in a whole bunch of different areas, especially Austin, around Austin, Texas, in most of the kind of the tech areas, caused massive runs on housing prices and jacked up rents, which then helped create that inflationary pressure because they made all of this money over the pandemic that they then spent in the market from crypto investments. That would be the argument that I would make if you're going to blame crypto for inflation. And they did this by taking advantage of not as intelligent or more risky investors, retail investors who lost money and therefore lost their purchasing power.
Man. So what I want to tackle real quick or take a look at is this has huge implications because to speak to M2 money. Well, hold on real quick. Jared says this real quick. I got to catch this. Jared says, to speak to M2 money expansion and how that impacts our world, I'd say watch this YouTube. Obviously, I'm not going to bring up YouTube right now. Folks, check this out in the LinkedIn comments. And you know what? Let me drop it in these comments so it kind of blasts to all of our channels. There you go. Go ahead and click that link. You should get that on at least YouTube and Twitch and LinkedIn. It's right there. And I'll drop that into Twitter momentarily here. But I want to talk about this case of NFTs as securities. You dropped this on me, and I didn't say much on it pre-phone or pre-show because I wanted to talk about it on the show. And the headline for those popping in, the headline says, "Are NFT securities? All eyes turn to the Top Shot case." And I thought, oh my God, regulators going after Top Shots. And for those who don't know, Top Shots is a top tier NBA and I think other leagues.
I think it's NBA
mainly though, of collectible NFTs on the Flow blockchain, and Dapper Labs owns Flow, and it's their own blockchain, and they're very popular with La Liga as well as Top Shot. So those are the two biggies, but they were the OGs with what's the cats? What was the cats? CryptoKitties. CryptoKitties.
Oh, yeah.
back in the OG, like old school. And so, but I was reading, as I was reading this case, Aussie, I noticed that this was not the SEC. This was investors suing Flow and dragging it into the limelight. And I was kind of flabbergasted. So, what's the case here? What is going on?
So there are a bunch of investors who invested in NBA Top Shots. Top Shots are like little moments of big NBA plays, little videos that are offered as NFTs. Um, these plaintiffs, this group of investors, are basically accusing Top Shots and Dapper Labs of earning millions of dollars by selling these as unregistered securities. They're basically saying that Dapper abused their position of propping up moments by restricting users from withdrawing funds on the platform and by um, basically flaunting the high price moment sales at users, um, essentially to try to get them to buy more.
So, we're basically talking about a monopoly, a front to end monopoly on the Top Shots themselves, the blockchain, and then price points. And what they're saying is they've blocked people being able to pull out their money and bid, or they're manipulating something somehow. So this is a legitimate case if those facts bear out. This is something that should be regulated, but like, what is the legal risk here? Like, why not Yuga Lab? I guess Yuga. I mean, this is like Ethereum owning Bored Apes. Is that what we're talking about?
Yeah, to a certain extent, the argument is it's like Ethereum, if the Ethereum Foundation owned Bored Apes, because Bored Apes, the trading and the sale of Bored Apes would be massively beneficial to the Ethereum Foundation in terms of revenue from transactions and sales. The big thing is like you can now withdraw funds from Flow blockchain since May 2021. So this is not even, it's not even that you can't withdraw funds anymore. It was just, during the bull market when it first became available, you weren't able to withdraw. That happens with a lot of protocols. And it's a very interesting case. They're trying to get these called securities when, like, trading cards, you would argue that they're collectibles. I would argue that they're collectibles. And are your
This raises
Pokemon
a great
cards
point.
securities?
These accusations are about, to a degree, fraud, market making, market manipulation, monopolistic mechanisms, some actual shenanigans. Why would this conversation go towards maybe protecting our rights by labeling these securities? Why is the security conversation even on the table in a case like this?
I think it's because it's the main mechanism they have as these investors to make the argument that, hey, you need to refund us, or because you were selling these as unregistered securities. These people are probably down a bunch of money and they're like, you should refund us because you were selling us unregistered securities and you didn't declare them as such.
Man, it just seems so frivolous, but in today's market, it's hard to differentiate frivolous investors. And I have never agreed even before crypto, I've never agreed that that we should call it consumer protections when the consumers see all of the disclaimers and the impetus is on them. I know full well what I'm investing in, and now I'm going to sue. It just seems so frivolous, and to me, it's just muddying the waters with this other case law that really needs to happen, and even the case law of its own self in terms of like, should a blockchain own its top tier NFT projects or any projects? And because there's so many stages of potential for manipulation, that case needs to move forward. But calling it a security is bizarre. It's far more bizarre than, like, I would even say, like, there might be a case for Bored Apes being a security as an NFT. What do you think about that?
Bored Apes, it's 50-50 because to a certain extent it's an access pass now. It's a membership club.
Mm-hmm.
And so is your gym membership a security if you bought a lifetime membership that you could sell? So it I have a hard time with that. I mean, I know of other projects that are NFT projects that are much more clear cut securities in terms of, I mean, one of your favorite projects is Doodles.
Yeah.
Uh, I could probably make a very strong case on, yeah, that's probably more nearing a security than not, because it advertises itself as a business, not an NFT project.
Yeah.
And it essentially, as NFT holders, they're getting rights and shares and access to business services and
Mm.
to potential revenues from said business, from the IP that's generated from their business. Um, and therefore, I would see that as a bit more of a clear case of an NFT being a security. Or there's tons of NFT projects that are, hey, let's group our we're going to group your investment together and invest in such and such. I don't
Yeah.
want to call them all out, but there's dozens upon dozens upon dozens.
Oh, yeah. And maybe we could end the show at the top of the show, or the last 10 minutes or 10 or 15 minutes. Maybe we could talk about this question that's bugging my brain. And that is, do you have a Doodles grant? No, Allison, I am dying to get a Doodles. But fun fact, Allison, I'm sure you know this. You watch it probably like I do. We were watching like 2 weeks ago, we were talking again about Doodles, and I love Doodles. And Allison, I am modeling our own personal development, small business coaching company. We're modeling the rebrand off of a mashup of a company I love called Mind Valley, mashed up with some of the positivity and optimism of Doodles. I love Doodles. We were looking at this like 2 weeks ago, and it was at like what, 1.75 ETH or something like that.
Something like that, yeah.
And so at the time, that was coming to about 1,700 US. No, it was coming. No, I'm sorry. It was coming to
30.
about 3,000, 3,200. And now that Ethereum's tanked to 1,700, the floor on Doodles is now like 2.1. And the US dollar price is stable. So I started wondering about this phenomenon in other NFTs, Allison. And that is even though we are listing NFTs on OpenSea by their ETH or by their Matic, or whatever the denomination is, I'm finding that the floor price is stabilizing to the USD. Are you finding that in other projects too, Aussie?
I'm finding that right now. I don't
Interesting.
necessarily say that that's something that happens across the board all of the time. I think it's a phenomenon at this point in time. There was a little bit of inflow of cash
Mm-hmm.
into uh, into NFTs as meme coin season kind of died off,
Yeah.
and we're still seeing a little bit of remnants of meme coin season happening, but it's definitely a bit more like a little bit of cash flow. And so I think we're kind of seeing people are who bought their NFTs and are holding their NFTs. Um, maybe they're kind of seeing, hey, I'm willing to leave at this USD price,
Yeah.
but I'm not willing. Otherwise, it's not worth my while. It's not worth my time. I'm going to keep it.
Well, see, that's the point. And what's interesting is the idea that we would ever do liquidity and not translate to USD, even for Bitcoin maxis. And I'd like to hear from Jared on this. Do you foresee, and this question is going out to Jarrett, and then I'll direct it to you, Aussie. Do you foresee a time, Jarrett, sick at home, or any Bitcoin maxi, when we will actually think in terms of satoshis? And so, Jared, I'm sure he's going to rally his answer. Aussie, what do you think about that? Like, our price points won't stay in ETH.
I think price points could stay in ETH. I know that during the bull market, and NFT prices were really looking at just the ETH price. They weren't when the hype is going on,
Yeah.
USD price doesn't really matter.
When the hype is going on. So that's an interesting principle. When the hype is going on, USD doesn't matter because it does because you're paying attention to your BTC or your ETH and you're watching its purchasing power. So you're still saying, what's my Bitcoin? Oh, my Bitcoin's at 60K now. And it's like 60K what? Why is a Bitcoin not a Bitcoin?
Yeah, absolutely. Like at the height of the bull market, yeah, you are looking at the USD value like at the end comparison. I do think satoshis and potentially ETH shards will be considered their own exchange of value, especially when we start looking at just external and maybe when the price of Bitcoin and ETH kind of reach that ceiling price where they're
Oh,
going to kind of stabilize. I
maybe
think
once we
that
hit the 22 million or whatever it is.
yeah, once we kind of hit that number where some of that volatility from the market is kind of disappearing and Bitcoin kind of gets to a little bit more of a stable, maybe slightly slowly increasing price point,
Yeah.
and we kind of see the same with ETH, then I think that's where the price point becomes. But right now, you can't do enough exchange in Bitcoin or ETH in terms of real asset. Like
Mm.
you could buy a house in Bitcoin, but it's far and few between. There are very few houses that you can do that purchase with, and you can't really buy your groceries in Bitcoin and ETH in 99% of the world.
So and this is an interesting thing. The main reason is this. When we have our nerd alert and we are Web3 fans, we pray for the day that probably BTC or ETH, maybe one of our others. Like it would be great. Like, do we know? We know the price of Cardano. Cardano is about, I want to say 24 cents today, 26 cents today, something like that. I've got it up somewhere. It's down a little bit today. 26 cents of what? USD. What is Cardano to BTC right now?
I
Who
have no
knows?
clue.
We would have to dig. Well, how many satoshis or something like that? We'd have to dig. And I'm curious as to at what inflection point. Jarrett says 100%. And Jarrett, you're watching, you're writing. I'll get to your next comment here, bro. At what point would we, whether it's the Chinese yuan or whatever, like Jared often talks about the falling bolivar, the Colombian peso. I'm sorry, the falling Colombian peso. And when he talks about it, he says, and I ask, what is it? He'll say, it's 5,000 pesos to the US dollar. Well, why the US dollar? Will there be a time in our life when, whether it's the Chinese yuan or BTC or ETH, when that is the thing we will refer to? And you're getting to a great point, like when you're talking about liquidity on property. Like, I think it has to be liquidity on not big things. I think it has to be a liquidity on something like milk or gas. At that point of societal penetration, I think that's the moment that we might start referring to the US dollar and BTCs or ETH. I don't think ETH will ever be that way. I think ETH will always be referring to the reserve currency at that point. What's that smirk for?
I disagree. I think ETH will probably have such a large transaction value because Bitcoin will not be the layer of smart contract like interactions, and you will still be paying transaction fees in ETH.
Yeah.
And ETH transactions, and you would likely conduct a lot of your transactions on the Ethereum network or layer twos built on it
That raises a
in
great point.
ETH, because as we could talk about later, stable coins could be securities, stable coins could disappear.
Yeah.
And so then you're really talking about ETH Bitcoin, and for ETH it would be ETH transactions and the ETH valuation
Well,
on
you raise a
your
great
chain.
point because my argument is really about velocity. How frequently transactions are occurring in a currency will determine how often we start referring to it and familiarize with its rate to itself. I do enough Coinbase and enough KuCoin transactions and enough NFT transactions in Ethereum that I start to see, oh, it's at 0.000 whatever ETH or 0.00 ETH, And I already know at the top of my head that's $100 or that's $50. And I'm kind of having this intrinsic understanding of its value in the moment. Whereas with Bitcoin, I'm always like, wait, and I do so few transactions with it. There's like very little relative velocity. Real quick, I want to get Roger. I'm going to get to your comment real quick. Thank you. I want to finish this story loop that Jarrett's got going on in his head. He says El Salvador is already doing this. Many maxis have been doing this for years because BTC over a longer period of time has shown to hold more value than the dollar. It's actually a fascinating way to start to price things. Like a house in 2011 was maybe 45,000 BTC, but now it's only 300 BTC. It's interesting, and I would love to be in an area or a market where people is going, here's a mango. It's 1,000 satoshis. I would love for my eardrums to hear that, just to break the monotony of us translating this to US dollars. But you got to admit that lift is a huge lift. That's equitable to us accepting that when we travel, we have to convert US dollars to Chinese yuan. And like, how much yuan is that worth? Because now we would be on the receiving end of where Colombia's peso is at. It's dropping against the US dollar. By then, the US dollar is going to be dropping against something like the BRICS nation's currency or the Chinese yuan, and we'll have to be interpreting that. Yeah. Have you ever done a normal transaction? A normal transaction in crypto?
No.
I haven't either. No, that is not true. I have done one normal transaction. What I mean by normal, I wasn't investing in crypto. I wasn't investing in an NFT. I wasn't sending money in a goofy way. I was buying a consumer good. And I was buying my mushroom grow material for my psilocybin shrooms. And when I saw that they took Ripple, I did that for the kitsch effect. They took Ripple. And I did that for the kitsch effect, right? And they took BTC and Cardano and all this other stuff, but I had extra Ripple at the time.
Actually, I did buy for some trading, like access to a software in crypto.
There you go.
I have done that. I didn't
probably
think about
some
it.
shady software. I got you.
No, it's really different, but yeah.
I think NFT long term will be better for asset management. Now, what Roger did not say was, I think NFT long term will be better for asset investing. He said asset management. What is he getting at?
Contracts, mutual funds. So basically a contract between potentially Roger and myself saying, hey, I'm responsible for managing $1,000 and each NFT represents $1,000. And that's kind of your contract, kind of representing your $1,000 for asset managment. And you
for liquidity, for velocity, for immutable ledger, like what's
immutable ledger tracking, easy tracking. Also, gold, silver. That's interesting. I've seen gold and silver tokens, gold tokens more than I have seen silver. But
Roger, how do you mean? Unpack that for us, because that could mean a lot of things because of how dynamic NFTs could be operating, commodities. But and he's kind of listing this. But tell us about the interplay of NFTs to these commodities real quick. Jarrett goes on to say, not thinking about cryptocurrencies compared to other currencies is a U.S. phenomena. Oh, this is interesting. This must be, or a Western phenomenon like Canadian. No, in Canada, you're always thinking about multiple currencies.
Oh, we think mainly in the Canadian dollar, but when like my dad works in the U.S. but we live in Canada, we do think about the conversion rate. My dad and I will talk about the USD to Canadian conversion rate and where it's sitting. So to determine whether or not he should convert some of his US dollars into Canadian dollars.
Now, is this just because, I mean, not thinking about currencies compared to other currencies is a US phenomenon? You're completely right, and I agree. But the why behind this, I think, is supremely important. It's because we have been the reserve currency. So, Jarrett, are you saying El Salvador, they have no problem because they're always converting because they're not the world currency, and it's just something Americanos are going to have to get used to the next level. Brian, I'm going to get to your question real quick, but did you have thoughts about that? Was there any additional thoughts you had about what Jared's saying?
I think what he's saying makes total sense. It can be to show ownership of an ounce of gold, silver, could be your shares in a mutual fund, it could be your share of your house, like your ownership of your house, your car, anything like that. I mean, we've talked about that, and I do think that that's part of the future. I do think collectibles and gaming are also important kind of use cases and for NFTs in the future. Right now, we've got about 25,000 different tokens. I think most of those will disappear as we move into the mainstream adoption of cryptocurrency. I think
Say that again another way, real quick. Say the same thing in another way, so I totally get my head around it. What will go away?
tokens, cryptocurrency tokens,
Yeah.
the majority of them will disappear as we head into mainstream adoption.
Oh, okay, got it. I'm sorry. I was still listening to the gaming concept you had there, but no, I fully agree. I think once games start not having their own like Mario coin or this token, when they start utilizing Bitcoin, ETH shards, satoshis, I think that could be an easy like a game a Web3 game developer who wanted to also push the cause forward. If they simply had looting and rewards in game that were straight currencies, not their own. Now, I understand there's economic incentives for them to do their own. They can get spreads when people are converting to BTC or something for offboarding. I get that. But someone on a mission for the cause, they would start helping us adopt in a big way. We're getting a lot of great comments real quick. I want to get to Brian's statement here. Some NFT traders already think in ETH. Now, that's interesting. NFT traders. That's probably true. Christie's listed ETH on their boards when they were selling high value in 2021. That's true. It's like thinking in kilometers or miles. And Brian, for those who don't know, Brian's in the UK. Of course, any European is thinking, well, generally, and the metric system, which is kind of ubiquitous. But they're also probably driving into a little area in the Basque region where there's just some currency conversion or someone still flipping around the euro or some other local currency. And Brian's group, the UK, they just got off the euro. Am I wrong in that? They're back to pounds now?
They were always on pounds.
They never
in the
went to
UK.
the euro.
Yeah, they never went to the euro.
Okay, got it. Or feet or whatever. It's just what you're used to. I do agree with that.
I agree and disagree. Yes,
Go for it.
some NFT traders do think in ETH value. Like they'll talk about, you'll often see traders that are like trying to promote their alpha group, their 1 to 100 ETH challenge. And
Okay.
it doesn't really matter what the US dollar that ETH is at the end. It's just getting from 1 ETH to 100 ETH is the
Okay.
whole challenge. However, in the end, I believe they are still in the back end thinking about US dollar value. They are still looking at that. Maybe not all the time, not when they're flipping all of the time, but they are still going back to that US dollar value because they're thinking, how much do I need to make on this spread, on this flip
Yeah.
to pay my next month's rent, to
Yeah.
pay my grocery bill, to fix my car, to do any of these other things. So they're still thinking about the value of ETH
Yeah.
in US dollar. But yes, they might look at their transactions and, hey, I bought my doodle for 2 ETH for 1.75 ETH. It's now worth 2 ETH. I'll sell it for that quarter ETH profit, even if the price of ETH has changed potentially. But
So they could be upside down if it's tanking.
They could be upside down in USD value if it's tanking, but if they're not in a spot where they're going to need the USD value anytime soon, then they're okay with the ETH gain rather than the USD gain.
See, and that's pretty interesting. Now the question is are trading fees based on gas or GUI, or is trading fees like if
It's
trade? It's GUI. And is GUI fixed? Our trading fees are fixed at 0.0001 ETH, and that's just always a flat rate or whatever it is. Or does that rate also throttle based on network use?
It just has to do so. trading fees, there's two sets, different kinds of trading fees. There's the platform fees and creator fees, and those are just set as a percentage. So, and often trading platforms are like 2.5%. You pay flat 2.5%. And then often there's like a 5% creator fee. Often. Not all collections, depends on the collection. And then on top of that, you think about gas. And gas will fluctuate with the network.
And you know what's tough about that is, if someone comes along and says, listen, I have a flat rate. My rate is $5 for, like, let's say a trading house like E-Trade. Flat rate, $3 fee for every single trade. If you trade 100 shares or if you trade one share, you're paying $3 fees. It incentivizes you to buy larger blocks. It minimizes your average unit cost, and you're set. The trouble with cryptocurrencies as the metric is, not only is the value changing based on network, but the value against the US dollar is also fluctuating real time. And so there's this limbo where someone could be saying, I'm getting ahead. I sold my doodle for 2 ETH. It came in at a quarter ETH profit. And in the back of their mind, they know that it's still the same price because it's been tanking against the US dollar. And they're technically upside down, but it's like this second level of obfuscation that's really... Go ahead.
I actually think this is a great kind of segue into something that Jarrett talked about on his most recent podcast. Crypto's a marathon, not a sprint. That was his tweet. And if you're thinking about cryptocurrencies, if you're thinking about your ETH and your ETH trading, your money that you've got flipping NFTs, as a marathon, not a race, then you don't care if you're upside down on the USD value because ETH's been tanking. You can write that off as tax loss.
B, your dollar cost average is getting lower.
your dollar cost average is getting lower. And because you're long-term bullish on ETH, you now have 0.25 more ETH than you did before.
That's true. I mean, the purchasing power is going up based on what you project the future to be. And so that you can't get knocked. So you do have to, but the trouble with traders are often short-term thinkers. They're often not marathon thinkers. They're not long-term thinkers. And so they themselves have a double self-deceit because they think they're getting ahead. They're actually getting ahead on the long term, but they're not getting ahead on the short term. And they're going to offboard as soon as the waters get choppy. And they liquidate. Go ahead.
I would disagree. We're seeing more and more NFT flippers and traders.
Interesting.
That are not necessarily offboarding that quickly. There's a whole bunch of them that are, big in the tech space, and they're making $100,000+ at their 9 to 5, their Web 2, and they're making a whole bunch of side money in ETH, flipping NFTs to essentially build that bag so that they don't even need to onboard nearly as much fiat or any fiat from their Web 2 live.
Yeah, and I want to get to this comment of Jarrett's, but I don't want to ignore Roger real quick. But real quick, Allison says it is. As a marathon runner, I agree. Listen, Allison, every time I interact with you, there's a new aspect to you that you run marathons? You ride motorcycles, you run marathons. I heard you did some other crazy thing. Jarrett told me you guys were talking on your interview, and it was like, you did what? I got more and more respect for Allison the Great every single day. I want to tie off this open loop from Roger, if that's okay. Roger's saying, Internet of Things tracked NFTs will be tied. Tracking NFTs will be tied. I had a great conversation with Jackie about supply chain, and we used the hypothetical of coffee beans. And the idea of, NFT makes sense to track, say, for example, organic or fair trade. But how do you know it's 10 pounds of coffee if someone could still put their toe on the scale? And the missing element is the Internet of Things. And this is why I used to be so bullish on IOTA. IOTA used to really get me going. 30 miles is a little too much. Oh, my God. The Internet of Things is still a far way off, and IOTA themselves as a project seems to be defunct. But I was very hopeful because the Internet of Things has got to come along. Have you seen any IoT devices that you're hopeful for that are integrating with anything crypto at this point?
I don't have anything. I'd love to hear if Roger has IoT stuff that he's really interested in.
Well,
I
Roger's Mr. Li-Fi, right?
Yeah.
And I'm sure he's touching more hardware than many people, except maybe George Pate, but that's all mining, right? But I am very curious. Um, Allison and Jared are hyping each other over here. So real quick, I want to get to this comment of Jarrett's here. To pile onto this conversation, I'm going to start buying a fixed amount of BTC weekly as opposed to investing a fixed amount of USD weekly. Now, for those who don't know, Jared's strategy has largely been a maxi who dollar cost averages. But this is taking it to the next level. How will this affect his dollar cost average, Oz?
It depending on the price of Bitcoin, it could be very good for his dollar cost average. Or it could well actually when it's going down, it could
It's going to be
negatively
huge.
impact. Well, no, it would be bad for his dollar cost average because as the price of Bitcoin drops,
You're right.
he's buying he's buying less and less USD value of it.
If it's based on BTC, you're right. And then if it goes up,
Then you're buying with a greater amount of USD each time.
so
And
this is the
so
inverse of dollar cost averaging. This is
you're
Bitcoin cost averaging.
your Bitcoin cost averaging. So I mean if you
Jared, I think when you do this, you're betting on the US dollar.
to a certain extent, I would say, yeah. Like you're not. I don't know if the math works here. I don't think the math works here in a way that's favorable for
Jared,
you.
you're going to have to unpack for us, brother, the math, because I think Aussie just figured out that you're actually betting on the US dollar with this strategy. We have to be wrong. I'm going to assume we're wrong, or he's in a fever stupor over there. The price dropping is a good thing, he says, but you're going to have to explain it because if it drops against the US dollar, but what he's betting, if it drops against the US dollar, yeah, you're spending more money.
No, if it's dropping against the US dollar, so if Bitcoin's dropping, you're spending less money, but you're buying the same amount. So technically you're investing less US dollars per piece of Bitcoin, which is, technically lowering your average, but you aren't actually benefiting, you're not helping lower your average because if you look at it, if I bought $500 worth of Bitcoin at 29K, and that's I don't even know what that actually would convert to. Let's say I bought 0.01 Bitcoin at 30,000. So that's
Sure.
300 Bitcoin at $300
Yes.
US. Then I buy 0.01 Bitcoin at
The same
27
Bitcoin. Yep.
at 27,000. I'm now spending $270. So if I bought with $300, if I'd bought in 300 with $300, I would have actually gotten more Bitcoin at 27,000.
But this was going to be my devil's advocate comment, and Jarrett just dropped it. If he's not thinking in USD, then it does make sense. Meaning you're saying, I don't care about my US dollar cost average. I just care that I'm consistently migrating a consistent amount. I don't know what the advantages are. And, like if I'm traveling to Europe and I want to buy a bunch of euros, I still want to get the best rate possible in that transaction. But to Jarrett's point, I'm still thinking in US dollars, and the purchasing power. So if my goal was to stack sats, as many sats as possible, I would still compare to the thing I hold. I feel like. Here we go. He says this. He says, I'll spend less money to get the same amount of BTC when it's cheaper.
But more when it's more expensive. And that's my argument is that at least compared to the US dollar, when compared to USD, this strategy and his USD balance or like cost average, he is necessarily hurting his dollar cost average. If you're just thinking in straight sats, it doesn't really matter. This strategy is you're stacking the same amount of stats every week, which is great.
I want to see the spreadsheet. I need to see the spreadsheet. And because even if you're thinking in BTC, Jarrett, and maybe he did this, knowing Jarrett, he probably did do a spreadsheet. But like, if you're thinking in Sats, if you're thinking in BTC, and the goal is just to migrate your money, and if it's taking off, right now we're at 25 and change, and then it rises, it rises past 75, he won't keep up with it and will start to hold cash on hand for the next crash. Okay. So like as with any dollar cost average, you adjust your amounts, but he's trying to get his brain programmed into BTC. I guess it starts to make sense. And for whether he bought it $300 worth of BTC or $270 worth of BTC, it was still 0.01 BTC. He's got 0.02 BTC in this example, or 0.002 or whatever it is. But it's now at 75. He's still ahead.
Up, way up. Yeah.
And so for those who don't know, and Jarrett, speak for yourself, Jarrett's belief on how this will X factor, between now and 2025, maybe 2026, he believes it will 4, 5, maybe 6X. And so, whether we're talking 300 for 0.01 or 250 for 0.01, it's kind of like not mattering. That kind of makes sense. The drop is good. Got it. And then let's go back here. Allison and he were talking about, let's jump back. Allison said, it's a marathon. I agree. As a marathoner, I agree. Jarrett said, crypto Twitter's a 100-yard dash. Sprinters, NBC, not crypto
or
bros.
NCB.
NCB, not crypto bros, are ultimate ultra marathoners. That's probably true. 30 miles is a little too much for me, Jarrett, Allison says. So maybe she's a marathoner, but not an ultra marathoner. And then they're just hooting and hollering at each other about distances. Jarrett jumps in and says this. Go ahead, Aussie.
Well, just Roger was talking about wearable fitness.
Hit me with that.
So I guess steps. I guess like step counters. If you think about Step-In or
Step-In.
There's probably a few different devices out there, either tracking your steps or your activity that could be related to it. So that's kind of interesting. I'd love to hear more, Roger. Like IoT is probably one of the areas that I don't know a lot about.
Because the engineering required for building any hard device is tough, and then to make an actual solution to a real problem on connecting it to crypto is interesting, or is challenging. I don't get, like we were talking about NFTs. Roger's conversation before was NFTs for trading, investing, for silver, gold, commodities. And then microtransactions with wearable fitness. I get it, but what other bridge? I feel like there's a lot of bridges. I saw an article that said AI will soon be talking to AI to be purchasing ads, to be making microtransactions, and then to Roger's point right here that he just posted for data collection. There's going to be microtransactions. And then it said this might be the case for crypto, which was the original vision for IOTA, because it was engineered to be a fractional token, like to be a very small denomination. And their goal was like, if a self-driving car were to pull up to a gas station and fuel itself, there would have to be a microtransaction that occurs so that it's seamless. Your wallet is connected to whatever. You might have to thumb drive or approve. But the Internet of Things, whether it's a wearable or not, it's almost moot. The Internet of Things that are talking with intercompatibility is huge. Maybe with sharding, this will begin to happen with smart contracts. But the case was that as AI talks to AI and sorts out these many convenience transactions, there's going to have to, it starts to make the case for crypto in everyday use in spite of what regulators are doing these days.
Oh, tracking products with their serial numbers being tracked to tied to an NFT so that you can show it'll show and track defects, or vintage. It's like we've talked about with clothes previously. With kind of tracking vintage on an item.
Or what is it called when it comes to art? Not veracity. There's a word like that. Progenitor. No, what's the term when it comes to art?
I'm not an art collector like you, so you're going to have to tell me.
Provenance. Provenance, depending on how hoity-toity you are, showing and tracking defects, or the inverse, showing and verifying purity, true utility. That it absolutely has to happen, and we're already doing this with RFID. We have a lot of good RFID chips, and it's really just in this case, you might need a dynamic NFT. Say, for example, you have a dynamic NFT for one particular semi-load. That it needs to be dynamic because all the other serial codes that are getting written to that particular semi-load, each of them have their own NFT blockchains. That case of milk, that case of orange juice, they both have their own source, and their serial codes were written on the NFT for the truckload, but then it was offloaded and its own ledger kept going. So every layer that there's a piece of data, there's NFT, but even though they're dynamic NFTs, functionally, it's actually quite simple, but not easy. Right? There's the difference between simple and
There's
not
difference,
easy.
but yeah, there's a difference between simple and easy.
Yeah. Real
And
quick.
I like
Okay.
Jarrett's point that he just wants to be able to say he has this much Bitcoin by the end of the year. I would love to know how much Bitcoin I would have at the end of the year, but right now I'm fixed on how much
Yeah.
USD I have or
Yeah.
Canadian dollars I have every month to put into the market rather than having unlimited USD and buying that fixed amount of Bitcoin. I would love short term or kind of being financially secure versus being
Mhm.
in financially on the edge or not
Yeah.
as financially secure.
Well, we've talked about, offline, the difference in classes and their time perspective, whether they're paycheck to paycheck, month to month salary, quarter to quarter, dividends, or like equity event to equity event. And what we're getting at is like it's kind of the same with investments. Like you got to fill up your living expenses rain barrel, and once then you have the income and cash flow to pay for that income expense rain barrel. Then it overflows into like let's just say emergency fund rain barrel, and then once it fills up the emergency fund rain barrel, any overage then fills up the next rain barrel, whether that's investments or a lot of people have like there's emergency funds, and then there's like big purchases. I got to replace the AC or replace my car, and then once that barrel is full, then they get into long-term investing, or some mechanism, and everyone's at a different point on that. I like the visual metaphor of rain barrels and filling up.
I think that's a great metaphor. That's an
Yeah, man.
absolutely great metaphor.
We didn't have time to talk about the Lido risk on Ethereum. Did you read this? We won't get into it, but just from a headline perspective, maybe we'll cover it another time. How I didn't realize this. Of all staked Ethereum, Lido represents 36%. And Ethereum stakers and other node holders and fans of the Ethereum network are starting to cry. This needs to get disseminated because in all the regulations about is this centralized or decentralized, is at risk for an attack when you have a single staking organization that represents. And I have my Ethereum staked on Lido, so maybe we'll talk about that. We didn't get to talk about Gary Gensler and whether or not he was going to get fired.
Great question.
Yeah,
Great
so we'll
question.
just throw it out to the audience before we do shout outs. Do you think this bill on the floor in the United States is going to get Gary Gensler booted, or is it just going to die on the floor? As I feel like it's a hype bill, meaning it sounds really good on the eardrums, but there's so much going on the floor right now.
I mean, I'm going to say you can go check out Decentralized News because we talked about it a bunch.
Check out Decentralized News, folks. It's a shameless plug, which I'm down with. Check out
That's it.
Decentralized News.
Some shameless plug. But also,
Yeah.
I'll just say that there are intricacies, but it's not just about getting Gary Gensler fired. It's not. That's the headline that's going around, but it's about restructuring the SEC and how they operate. And so it's actually a much more encompassing bill than the headline suggests. And so
it's called the SEC Stabilization Act. And though we know a lot of these titles are meant to be a marketing component to sell people, in this case, especially if you buy into the argument that the American development or Western development of crypto technologies is a national security issue, as Jason Lowry has pointed out, as many people have pointed out, then the SEC not being a bulldog on crypto projects, but issuing regulations first or clarifications and guidance first, and then enforcement later as a follow-up action. But right now it's regulating by enforcement, and that's not helping us get our ducks in a row, which we would love to do because we'd still want to. Because I was going to ask if we had time. We're at the top of the hour. I was going to ask if we had time. Maybe let's do this rapid fire, and then we'll hop off. Rapid fire. What is the cleanest path for someone with an NFT project or a crypto project so that they are not at risk, but they dive deep into development? If you had to advise, would they go just file as a security and get it out of the way? Or what would they avoid so that they were never at risk?
Major things. Make sure you don't control a huge percentage or a mass percentage of the token supply, no more than 10%. If it's an NFT project, then I would... NFT project is a lot harder to decentralize because you don't really... It has to be art. You essentially need to be selling art or a membership pass or some kind of services. You can't be selling an investment service. You can't be selling... like you shouldn't be selling it as an NFT as a investment service, or as a share in a business, as a venture fund. It really needs to be arts, collectibles, memberships. And if you're a token, 10% of the supply, slowly diversify who helps lead development and how development is led on the token supply and what's done with the token, away from an original core group to a much wider, to the whole community being able to contribute to development.
Wow. And I'm sure much more. We could obviously say, check your disclaimers. We could obviously say, never even hype the thing. Hey, if we do X, it'll grow by Y. Like none of that. It's got to stand alone. And if we weren't facing such heavy-handed SEC regulation, if we were in a mastermind group and someone said, hey, my project, and I'm hyping growth of the project as the reason people should be involved, I would tell them that's poor form. Does your project stand alone on its own, or does it not? Is it providing a value-added service, or is it just providing hype for hype's sake? Are you an MLM? I don't mind. There's legal MLMs. There's Ponzi's. Those are illegal. There's legal MLMs, but they're still cringy if you're doing them wrong. So build a legit business. Build a legit service. And I tell you, the cases are probably far fewer than you realize. Quick shout-outs. Austin, any shout-outs today?
I don't really have any major shout-outs.
For anyone.
I'm going to shout out people who don't just blatantly engagement farm on Twitter.
Oh, thank you.
I'm actually working on a thread right now of just calling out ridiculous and honestly shameful behavior on Twitter.
It's getting
on
beyond
engagement
cringe.
farm roll.
Yes.
It's getting like the posts about interact if you're still active.
Yeah.
Absolutely shows that you are not providing value.
Oh, yeah.
And if that's every third post that you're making, you really aren't doing anything.
Yeah, man. My shout out is to Alexis Ohanian. Alexis Ohanian, the name might come to mind and might not. The original founder of Reddit, no longer CEO of Reddit, but twice he had come back to Reddit to resteward it when it had lost its way. He's also got a masterclass about entrepreneurship, which is second to none. He's got a solid marriage with Serena Williams. He's got a solid relationship with his daughter. He works a lot of work-life balance, but if you listen to his masterclass, he is big on diversity. He started his own investment fund called 776 in order to fund underrepresented people in untraditional ways. He doesn't hire Stanford grads. He hires people with chops. He has seen what it takes to build a startup from the ground up. He often says, I do not hire for pedigree or for skill set. I hire for emotional set. Does this person ask me, that's not my job, or do they take it on because they know that most to get anything worthy off the ground takes superhero efforts, and if I'm asking for it, I'm shamelessly doing so. Most people who are asking for more out of their employees often don't have vision and they're just trying to squeeze blood from a stone. But many people with a clear vision that is passion driven, you do need to squeeze blood from a stone because it will take everything to get that lift off. I love Alexis Ohanian's demeanor. I've followed his Twitter. Alice, I highly recommend following his Twitter. It is often very human, but also often very encouraging. In fact, they did most all of their hiring for 776 through a Twitter post. Phenomenal people, really interesting stuff. That's my shout out for today. My shout out to Jarrett. Jarrett, feel better, bro. Well, I'm sure we're going to be on soon. And to all the wonderful people, our Regs, Roger Williams, Allison, Brian Naughton, George Pate. Thank you guys for stopping by. You guys know where to find us. Find us on LinkedIn. Find us on YouTube, notcryptobros.xyz. Share with a friend. And if nothing more, guys, have a great afternoon. Take care.